Okay, good afternoon, folks. Good afternoon, hopefully, or good evening, good morning, depending, of course, on where you are in the world. Not the usual setting for me. I'm not in my usual London office. I'm now I'm on the other side of the world. I'm in my villa in Thailand. I'm just here for a week. And of course, as traders, we never sleep. So we're always working around the clock. And that's one of the beautiful things about, I think, about being, a trader working for yourself, is that you basically can work from anywhere you are in the world. I'll be totally honest though. Normally, when I'm here in my villa, I'm not normally here trading throughout the day. We've got a beautiful beach here, beautiful restaurants and so forth. So I'm normally having a bit of time out. But of course, I'm joining you here today. So hopefully you are all well. This is my third week now in the Eightcap guest analyst chair. So delighted again to be here. Next week, I will be back in my London office and it will be resumed. I think here, because of the lights coming in here from my pool area, so I'm just going to, I'll tell you what I'm going to do. I'm going to switch the cameras over. Otherwise, it's a little bit unclear. You can't really see me. Not that you want to see me, of course, but we'll switch the cameras over there. So there I am. Here we go. Right, hopefully this is coming through nice and clear, and you can hear me okay. So let's just go through very briefly what I think we have in store for this week. Talk a bit about what happened last week. We'll talk about a bit about this week, what we're expecting in terms of economic releases. I'll talk to you a little bit about my bias, what I think could be potentially happening in the markets this week. And I'll also do maybe 5 minutes of my short-term scalping strategy to see if there are indeed any setups. And if you've been following me now for the last couple of weeks here on the Eightcap channel, you would know, hopefully, the intraday strategy style that I use, basically getting into trends on pullbacks. So we'll touch on that as well. And again, for those of you that have been following me, you'll know that this, what you see on your screen here at the moment, is the, well, I think it's almost the holy grail for me. No such thing as a holy grail, but it does indeed tell me exactly where I should be looking. So the, just change that over there. Hopefully we're coming through okay. Yep. So basically it tells me where the money is flowing at this moment in time. Okay, where the money is flowing in terms of what currencies are being bought against what currencies are being sold. And as a trend follower, I like to buy the strong currencies and I like to sell the weak currencies. Trading is all about having a slight edge. That's all we need in trading, a slight edge. And this gives me my slight edge. I don't want to be trading currencies. For example, if you look at the screen here now, we've got this orange line and the grey line. The orange line, if you look at the key here, is the Australian dollar. The New Zealand dollar is the grey line. Yeah, they're moving together. They are moving pretty much in sync at the moment. There's quite a bit of correlation in there. They are, of course, commodity currencies, but they're moving in sync. If I'm a trend follower, is there much of an edge in trading that currency pair at the moment? Maybe not. Am I not better off buying a currency that's moving up and selling a currency that's moving away? And that's exactly basically how I form my edge through the trading week. I normally have mine set here on the 4 hour. By the way, you can trade this out anytime you like. Just head over to forexsignals.com and try it out for 7 days. I'm sure you'll find it very, very useful, pretty much invaluable. I normally have mine set on the 4 hour because I can see exactly what's going on the 4 hour on the bigger picture. You'll see here basically the green line, that is the greenback. Greenback has been really, really strong. I think we're at 20-year highs now on the against the Japanese yen. We're at 6-year highs against the euro. The DXY is at I think it's, I'll have a look in a second what the I think it's about 17-year high on the DXY. So the dollar is super strong, and the dollar is super strong. Well, if you follow the economics at all, you'll know why the dollar is super strong. It's basically super strong because of this. This is the government bond. These are the bonds, the 10-year bonds of the top 8 economies. And you'll see the US sitting there at the moment, it's flirting with around the 3%. So just briefly, if you want to lock away a 3% yield, you want to buy a government bond that's going to pay you back at the end of the term. Well, the US dollar is a grade A government bond. You're going to lock away 3%. Now, that might not sound a lot, but it does basically fit into the profile of hedge funds and pension pots and 401 traders, accounts and so forth, because it's pretty much safe money. If you want to get that T-bond, that treasury bond, clearly you need to buy the US dollar so you can buy the bond. So you can see all these currencies now, all the yields are edging up. They're all edging up, which basically means all these particular economies or currencies are quite strong. You saw that there on the momentum meter. But interestingly enough, there's two things that stand out on this chart for me. First of all, you've got the Japanese yen down here. Japanese yen is flat, not moving. Japanese yen is just basically poised around 0.25%. Bank of Japan, very keen on not wanting to move interest rates. They are trying to still spur on inflation, because obviously that's a good thing, not the type of inflation you're seeing here in the UK. More about that in a second, of course. But what's the other thing that's interesting here are these two currencies. You've got the German government Bund. I was about to say Deutschmark there, and that shows my age. You've got the German government Bund, and you've got the Swiss franc. They have been trading below parity, below par. These are now edging up. They're edging up, and the US dollar is edging up. I'm swaying on a bias now that you may start seeing some strength coming into the euro currency as these bonds push higher, or the bond yields push higher, and the ECB, which are now penciling in potentially a rate hike, an actual rate hike, not QE, not easing back on bond buying, but a rate hike, maybe as soon as July. So that's becoming now really, really something that we are keen to watch. So there could be potential now movement into some euro strength. All the other economies, New Zealand, Australia, Canada, UK, they've all, and the US, of course, they've all started moving their interest rates. To the upside. The euro hasn't, but now we may be seeing some movement on that. So keep an eye on the euro. So let's just have a quick look then at the DXY. So this is the dollar index. This is the index that pictures the dollar against six main other currencies. The Swedish, it's not there, is it? It's on the Commodities. It pictures it against the six major currencies. I think the Swedish krona is in there at the moment. So this is now the US dollar. It's on a daily chart. We've got to go out to the monthly to see the last time we were up here. The last time we were up here actually was 2003, March 2003. Yeah, that's 19 years ago. It's pretty much at these highs at the moment. But is the pending rate hikes in the US, is that becoming a bit more priced in? Well, that, of course, we don't know. But I look to see price action to give me clues about that. And one currency pair that I'm looking at in particular on that front is the pound. Now, the pound has been heavily sold off because really the US strength. That's why the pound is so weak, as all the currencies against the US dollar have been sold off, for the US dollar. But now we're seeing what I consider to be some bullish price action in this currency pair. Okay, so this is the pound. It's aptly named cable. Okay, so we hit a low last week down here at 121.50. Again, I'm just going to pop it out to the monthly, and you can see the last time we were down here, okay, was around, well, when was that? We were down there 2020 and then 2019. But this is a level of structural support on the monthly chart. Okay, so if you look here, the best way to look at support and resistance on the higher time frame charts is to go to the line chart. That way we move out the wicks, we take away the highs and the lows, just put in the line chart. So I want to put in a level of support in around here. Okay, so this is basically a zone of support that we have seen back from 2 or 3 years ago. when you go back to the candlestick chart, okay, it really is a great way to see the see these levels without the noise of the highs and the lows. Okay, and you see this type of price action where we break through support, key level of support on the higher time frame weekly chart, and you see this daily pattern. It's an indication, it's only an indication that this is a support zone that's being respected. So I teach a trading strategy. It's actually called the naked day trading strategy. And it's naked because we strip out all the indicators. We just look at pure price action, looking for this type of formation at key levels of support and resistance. This is a bullish engulfer. So we never know, of course, when the markets are putting back, whether it's going to be a reversal and what have you. But when you see this pattern here now, with this green candle, which is basically Friday's candle, fully engulfing Thursday's candle, that is an indication of that zone being respected. So we've now basically got a trade going on with a buy in cable, buying the pound against the US dollar, coming into those resistance levels on the DXY as well. And our profit targets are going to be back up there around the 24.50 level. So it's a daily trade. So obviously your stops are going to be wider. The stops are going to be below this swing low. And our first profit target is going to be up there around 124.5. With this strategy, the way I teach it inside our trading community is to have two exits. Basically, we exit half the trade at TP1, move to break even, and then the second half at TP2. So TP1 around 124.5. TP2, we can really take this up to 126.30. So it makes for a really good, decent risk reward. It is a reversal strategy. Remember what I said to you at the beginning? I'm an intraday trend follower. I follow trends. That's intraday. This is a reversal, counter trend, but it's on the daily charts. So keep an eye on that. Just have a quick look then at. One other thing I wanted to mention. Just for those of you that maybe are struggling with your trading. I know it's difficult sometimes to be able to see the wood from the trees, and you make some and you lose some. If you're struggling with your win-loss ratio, that's basically the number of wins you have against the number of losses. If you just really can't seem to make any sort of movement on that, I'll just show you a little technique that I think can help you. And I do this I haven't done it this week because I'm on vacation, but I do this every Sunday, the start of the week, if my family permit, if not very early Monday morning. I just basically plot the key levels of support and resistance. And I do this, as I say, at the beginning of the week. We want to do it at the beginning of the week so we don't sort of have any bias when we're seeing a potential trade setup. Plotting in the key levels on the daily chart and not trading through those levels if my take profit target has to be through that level. So basically plotting in support and resistance. And I've just alluded to how you do that. Daily chart, line chart, removing the wicks. This is an exercise that will vastly improve your win-loss ratio. I'm going to put in the key levels. Yeah, this happens to be the euro against the New Zealand. You can see anything that's got a big sort of V shape, a couple of those V's or a couple of the A shapes, those are levels that are going to be respected, should be respected on the higher time frame chart. So plotting those in such as there. Now, this, as I say, is the daily chart. If you want to plot these on the weekly as well, you might want to use a different color. I can tell you now, what is that level? That is a really mighty. This is Euro New Zealand, yeah. 165.70. It's a big level, okay? Big level. We broke through there as a resistance zone, back to retest, and off we go again. So just the trick of this is not to have too many. You don't want so many in there that you don't trade at all, but just the key levels. And this is the biggest problem for most traders, is the discipline of not always being in a trade. We seem to have this compulsion, don't we, where we always need to be in a trade, always need that excitement. Well, if you can overcome that, then you're going to be halfway there. So just the key levels. If your profit target, whatever strategy you're using, is through those levels, don't take the trade. Sit on your hands. Okay, just want to share that with you. Again, excuse me, putting back the candlesticks, then you can see quite clearly the support and resistance zones mapped out. Excuse me. Right, okay, actually sweltering. Hopefully the air conditioning in here is not overpowering the noise because it's purring away over here. I'll have to get them to look at But there you go. But it's still very, very warm. I've just been out for a bit of Thai curry for lunch, and I was sitting in a sort of an open air restaurant with a fan right on me, and it's on the wall there. The temperature is 32 degrees out there at the moment, so it's good to get back into some aircon. Okay, so that's how I'll do it. To do that on all the different currency pairs that you're going to be trading, try if you can to do it ahead of the week. That way you're not going to get the forward bias, as I say. Right, let's just have a quick look then at the euro dollar. It is the people's favorite. As I say, it's basically showing you where the main money is. Remember, euro dollar, I think 30% of all currency transactions go through this currency pair. Okay, at the moment it's trend continuation. You know I'm a trend follower, so I would be looking basically to get in on that trend. The trend, we know the expression, don't we? The trend is your friend until the bend at the end. That's my expression anyway. That's what I've been using for the last, I don't know, last 20 years I've been saying that. Trend is your friend to the bend at the end. At the moment we are trending lower. Now, despite the fact that I might have a long cable trade, maybe a dollar top, I can't predict where the market's going. I can just trade my strategy. At the moment, I would say this zone here, around the 104.80, it's been breached. Okay, so the path now of least resistance is lower. I never want to be selling the bottoms of candles or buying tops of candles. I always wait for the pullback. I love a 50% pullback. At the moment, we've had this pullback. We've had this little bit of bearish price action in here as well. Make it a little bit bigger for you. Okay, this is a 50% pullback, a trend continuation trade. For some reason, my count isn't, couldn't activate the count on this one, but selling on this pullback, Fibonacci, it's not actually a Fibonacci number, 50%, by the way. With this 50% pullback, stops above that resistance zone, old support, new resistance, stops above there for trend continuation. So that's mostly a trade that's setting up right now. Let's have a quick look before I talk about the strategy, and then I'll jump off. But let's have a quick look at the economic calendar for the week ahead. There's a bit of news coming out. It was quite light last week on the news front. If you are trading the Forex markets, I strongly recommend that you are aware of these events as they unfold throughout the trading week. Now, even if you're not trading the news, knowing when these events are coming out is really, really important. The last thing you want to be doing is getting stopped out of a trade the moment you place the trade because of a news event and the spreads widen and so forth. So check it out. This is free. It's Forex Factory. I use Forex Factory. Forex Signals has their own one as well, but we just take a feed from another supplier. I think we take it from FX Street, but you can use any one you wish. But this is what you should be looking at, so you know what's coming up for the weekend. We'll have a quick scan through. I'll explain a little bit about some of this data. This is my time. It's set to 2:44 here, so it's basically so you set this to your own time, of course. Where are you in the world? So this time down here is on my clock. It won't be the same as your clock, of course. So don't. And I haven't changed my clock here to the UK time. So monetary policy meeting, monetary policy report hearing in the UK, 9:15 tonight. Not a massive mover in the UK. Remember, they've already started to move their interest rates at the moment. But we've got the minutes out of the Australian. Remember, they are the RBA. They moved their interest rates last time. Markets were expecting a 15 basis point rise, I think, and they came in at a 25 basis point rise or 35 basis point rise. So I'd be interested to hear what the RBA, the Reserve Bank of Australia's panel members are basically saying about the economy. Are we likely to see a continuation of rate moves in the Oz? So we'll be paying attention to that. If you're trading the Australian currency, it could be volatile tonight until 8:30 in the morning, which, well, I can't work out all your different time zones, but it's 8:30 in the morning, Thailand time. So keep an eye on that one. We've got retail sales out in the US tomorrow as well. Retail sales are normally very important. It's an early sign of inflation. We know inflation is flying at the moment, but we want to see how that's affecting the sales. Are people's spending patterns being contained because of the high price inflation that we're seeing? We keep an eye on that. If it's strong, then that's just going to add more fuel to the fire in terms of the rate hikes in the US. Although Powell did say last week that he's not going to be doing two big moves coming down the line. But I think on that note, Fed Chair Powell is also speaking Wednesday, so keep an eye on that, see what he's really saying. And then we've got CPI. CPI is Consumer Price Index. It's basically inflation. It basically tells us what is happening to prices. Remember, central banks, they are told, mandated to keep inflation at 2%. They're going for 9.1%. Prices going up 9% from last year. Absolutely, and it's not just there. I mean, it's going on all over. You've got you've got CAD inflation coming in at 4.7%. US is up there at 8%. So inflation is a global phenomenon at the moment. So there you are. So anyway, we'll keep an eye on that. Again, early signs of more rate rises in the UK if the CPI comes in much bigger than expected. So we'll be definitely watching that one. Aussie unemployment, again, another key number. Unemployment, the first sort of event, if you like, that gives us clues about the health of the economy. If unemployment rates are dropping, that means more people have money, more people have jobs, more money, spending more, up goes inflation, 3.9%, pretty much full employment there. And parliamentary elections next week. So quite a quiet week in terms of the news. But be aware of the news. Make sure you get that sorted out. So trading is all about preparation. Yeah, do this on a Sunday. Get your calendar sorted out. Get your support and resistance line sorted out. You got your strategy, and trade without hesitation. Talking about a strategy, one of the strategies I do trade and teach inside my trading room is. It says it's not authorized for some reason. Why am I not authorized? Should be coming out in a second. Hopefully this works. I don't use this computer normally for. I'm going to have to put in my username and password, and I need to do that on another screen, obviously. Otherwise, you'll be all logging into my account. Just bear with me a moment. There we go. Basically, it is a tool that I use to help me with. They've obviously locked me out. Okay, well I can't show you that today. That's never mind. It's basically my my trading tool, which helps me find these trading opportunities. Basically, it's a pullback strategy. I'm waiting for the markets to pull back in the direction of the trend, and then looking for entries using pure price action. But unfortunately, my tool is not deciding to play ball at the moment. It's my pattern finder. Did it last week. I'll be doing it next week. Don't worry about that. Make sure you tune in next week and you can see it in real time. I'm just having one more go. It doesn't work. It doesn't work. Nothing we can do about that, unfortunately. There we go. Is it coming up? Is it coming up? No, not going to come up. All right, well, that's not necessarily a problem. Okay, so keep an eye this week then. I'll wrap it up there. I've only got 25 minutes permitted. So keep an eye on the US dollar this week. We are on these massive new highs for the US dollar. Maybe we're coming into a level of resistance. Well, I don't know that, but certainly if you're looking at what you're seeing in the pound at the moment, with pound price action showing a respecting of that key level of massive support, massive monthly support, maybe there are some opportunities for you to take that counter trend trade. But with always, I always say this when trading, it doesn't matter who you're following. Lots of educators and gurus out there all telling you, what's going up, what's going down. Ultimately, none of us know where the markets are going. It doesn't matter who they are. No one knows where, with any real degree of certainty, where the markets are going to go over the next few hours and what have you. So you need to have a trading strategy. You need to have something that you have proven, back tested, and trade it without hesitation. Listening to someone and saying, buy the dollar and sell, quite honestly, you get it right sometimes, you get it wrong sometimes, and you'll end up just in that proverbial cycle of doom as you hop between educators and gurus looking for someone that's going to show you the magic. So if you want to be successful, you've got to seriously consider putting the time in by developing. Using someone else's strategy is fine, but make sure you know all about it. Okay, I'll be back on Wednesday. I'll be doing another event, which you may hear about on the Marketing Blast. So make sure you tune in for that. If not, and you're just a Monday person, I'll see you next week from a lot cooler location. However, shouldn't complain. Absolutely loving it here in Thailand. Okay, folks, thanks for tuning in. See you next week.